For decades, earning a $100,000 annual salary was seen as the ultimate milestone of financial success in America. It represented stability, freedom, and the belief that anyone reaching six figures had officially escaped money problems. A salary of that size was supposed to provide a comfortable home, reliable transportation, family vacations, generous retirement savings, and enough financial security to handle life's unexpected emergencies without stress. Parents encouraged their children to pursue careers that could eventually lead to a six-figure income because they believed it guaranteed a better life. Society reinforced this idea for decades, making $100,000 feel like the finish line in the race toward financial independence. But over the past 20 years, that promise has slowly disappeared. Today, millions of Americans earn six figures and still struggle to make ends meet. They aren't living extravagant lifestyles or wasting money on luxury purchases every day. Instead, they find themselves asking the same question at the end of every month: where did all my money go? The answer lies in a combination of economic changes, rising living costs, hidden payroll deductions, and psychological spending habits that have quietly transformed what it means to earn a high income in modern America. The first misconception begins before the first paycheck even arrives. When people hear someone earns $100,000 a year, they automatically divide that number by 12 and assume the person receives more than $8,300 every month. On paper, the salary appears enormous. In reality, that money begins disappearing long before it reaches the employee's bank account. Federal income taxes claim a significant portion, followed by Social Security and Medicare payroll deductions. In many states, workers also pay state income taxes, while some cities impose additional local taxes. After government deductions come employer-sponsored health insurance premiums, dental and vision coverage, disability insurance, life insurance, and retirement contributions. Although retirement savings are beneficial in the long run, they still reduce the amount of money available for current living expenses. By the time every deduction has been applied, many professionals earning $100,000 discover their monthly take-home pay is closer to $5,000 or $5,500 instead of the $8,300 they originally expected. Before paying a single household bill, nearly 40% of their salary has already disappeared. Unfortunately, the remaining income immediately collides with the single largest financial obstacle facing modern America: housing. In many metropolitan areas, rent for a modest one-bedroom apartment ranges between $2,500 and $3,500 per month. That means well over half of a six-figure earner's take-home pay may disappear simply to keep a roof over their head. Those hoping to purchase a home instead of renting face an equally difficult challenge. Home prices have risen dramatically over the past decade, while higher mortgage interest rates have significantly increased monthly payments. Even after purchasing a home, property taxes, homeowners insurance, maintenance costs, and unexpected repairs continue draining household finances. A broken air conditioning system, leaking roof, or plumbing emergency can cost thousands of dollars without warning. Home ownership, once considered the cornerstone of the American dream, has become one of the biggest financial burdens for many middle and upper middle class families. Transportation creates another unavoidable expense. Unlike many countries with extensive public transportation systems, much of America depends on personal vehicles. For millions of workers, owning a car is not a luxury, it is a necessity. Yet the true cost of vehicle ownership extends far beyond the monthly loan payment. Drivers must also budget for insurance, fuel, maintenance, tire replacements, registration fees, parking, and unexpected repairs. New vehicles have become significantly more expensive in recent years, forcing many buyers into longer financing agreements that keep them making monthly payments for 5, 6, or even 7 years. By the time housing and transportation have been covered, a large portion of a six-figure salary has already been committed before groceries or utility bills are even considered. Education debt places even more pressure on high-income professionals. Many careers paying six figures require university degrees, graduate school, or specialized professional qualifications. While those credentials open the door to higher salaries, they often come with enormous student loan balances. Thousands of graduates begin their careers already owing tens or even hundreds of thousands of dollars. Every month, hundreds of dollars automatically disappear towards student loan repayments. Instead of building wealth during their highest earning years, many professionals spend the first decade of their careers simply paying for the education that allowed them to secure their jobs in the first place. This hidden financial burden dramatically reduces their ability to save, invest, or purchase a home. Even after taxes, housing, transportation, and education costs have been covered, another powerful force quietly erodes household budgets: inflation. Inflation is often discussed as a percentage during economic reports, but its real impact becomes obvious every time families shop for groceries or pay monthly bills. Basic necessities such as milk, eggs, bread, meat, vegetables, coffee, household cleaning supplies, and toiletries have become noticeably more expensive over the past several years. Utility bills continue rising as electricity, natural gas, and water costs increase across many regions. Internet service and mobile phone plans, once considered optional luxuries, are now essential parts of everyday life for work, education, communication, and entertainment. Each price increase appears small when viewed individually, but together they quietly remove thousands of dollars from household budgets every year. Healthcare presents another uniquely American financial challenge. Even workers with employer-sponsored health insurance rarely escape significant medical expenses. High deductibles, co-payments, prescription costs, specialist visits, and unexpected emergency room bills often leave insured families paying substantial amounts out of pocket. A routine medical procedure or unexpected accident can instantly consume months of savings. Many Americans discover that being insured does not necessarily mean being financially protected. Instead, healthcare has become one of the most unpredictable and stressful categories within the household budget. For families with children, financial pressure becomes even greater. Childcare ranks among the largest expenses faced by working parents. In many parts of the United States, full-time daycare costs between $1,200 and $2,000 per month for each child. A family with two young children may spend more on childcare than on rent or their mortgage. Beyond daycare come clothing, school supplies, extracurricular activities, healthcare, birthday celebrations, sports equipment, family holidays, and eventually university savings. Every stage of childhood introduces a new category of expenses, stretching even six-figure incomes far beyond what previous generations experienced. What feels like a comfortable salary for one individual can quickly become insufficient for a family of four. Yet economic pressures tell only half the story. Human psychology plays an equally important role in keeping high-income earners financially trapped. One of the most dangerous habits is lifestyle inflation. As income increases, spending usually increases alongside it. Rather than saving the additional money from promotions and pay rises, many people gradually upgrade every aspect of their lives. A nicer apartment, a newer car, premium coffee every morning, expensive restaurants, food delivery services, luxury gym memberships, streaming subscriptions, designer clothing, upgraded electronics, and frequent weekend getaways all begin to feel justified because the individual is earning more money. None of these purchases seems excessive on its own, but together they consume thousands of dollars every year. Modern subscription culture makes the problem even worse. Music platforms, video streaming services, cloud storage, premium apps, online shopping memberships, meal delivery subscriptions, fitness platforms, and countless digital services quietly withdraw money from bank accounts every month. Because these payments happen automatically, many people barely notice how much they spend until they review their annual bank statements. Convenience has become one of the most expensive habits of modern life, especially for high-income professionals who value saving time more than saving money. Social comparison adds another layer of financial pressure. Six-figure earners often work alongside colleagues who drive luxury vehicles, wear designer clothing, travel internationally, and live in expensive neighborhoods. Social media amplifies this comparison by constantly displaying carefully edited images of success, wealth, and luxury. Although most people understand these posts rarely reflect reality, they still create a subconscious desire to keep up. Someone buys a luxury SUV because everyone at work seems to have one. Another upgrades to a larger home because neighbors recently moved into a newer development. Expensive holidays become annual expectations rather than occasional treats. Credit cards make these lifestyle upgrades seem affordable in the short term, but high-interest debt gradually transforms temporary overspending into a permanent financial burden. Ultimately, the reality of the modern six-figure salary reveals an important truth that many people overlook. Income alone does not create wealth. Wealth is determined by how much money remains after every bill has been paid, and how consistently those remaining dollars are saved and invested. Two people earning exactly the same salary can experience completely different financial futures depending on how they manage their money. One allows lifestyle inflation to consume every pay rise, while the other intentionally controls spending, builds an emergency fund, invests consistently, and avoids unnecessary debt. After 10 or 20 years, one person owns appreciating assets and enjoys genuine financial freedom, while the other continues living from paycheck to paycheck despite earning an impressive income. The story of America's struggling six-figure earners is not simply about rising prices or poor financial decisions. It is about an economy where the cost of living has increased faster than wages, where essential expenses consume a growing share of household income, and where psychological pressures encourage spending rather than saving. Earning $100,000 remains an impressive achievement, but it is no longer the guarantee of financial security it once was. In today's America, true wealth is not measured by the size of your salary, but by your ability to keep more of what you earn, invest it wisely, and resist the invisible pressures that quietly turn a high income into nothing more than an expensive lifestyle. I hope you like this video and this can helpful for you, and if you like this video, please subscribe this channel and like and comments below. Thanks for watching.